Gold's price regained its confidence yesterday as it rose after being for 2 weeks in the reds. In today's report, we intend to have a look at the revival of the negative correlation of the dollar with gold's price, geopolitical issues that could affect gold's price, and the Fed's stance, all on a fundamental level for the gold market. For a rounder view, conclude the report with a technical analysis of gold's daily chart. Gold's negative correlation with the dollar seems to be in full swing over the past week as gold's price practically retreated until Friday, while as the current week started, gold's price seems to have regained its confidence to climb higher. On the flip side, dollar bulls dominated the greenback's direction over the past week, while they took a break as the week began allowing for gold's price to rise. Overall, we see the case for the negative correlation of the two trading instruments to be maintained over the coming week. Hence, should the dollar retreat further, we may see gold's price edging higher. Over the past week, we saw the chances of the Fed's stance affecting gold's price increasing. On a monetary level, we note that Fed Chairman Powell and a number of other Fed policymakers made the case for an easing of the Fed's rates cutting path and the market's expectations for a 25 basis points rate in December meeting eased over the week, with Fed fund futures implying a 52% probability for such a scenario materializing. Should more Fed policymakers highlight or imply the need to slow down the reduction of the interest rates, we may see the dollar being supported on a monetary level, which in turn could weigh on the precious metal. The war in Ukraine may be the main geopolitical issue that could create shockwaves for gold's price. The war has completed 1,000 days and in the past few days has escalated. It's characteristic that, according to Associated Press, Russian President Vladimir Putin today signed a revised nuclear doctrine declaring that a conventional attack on Russia by any nation that is supported by a nuclear power will be considered a joint attack on his country. In the big picture, Russia has now lowered the threshold at which it would use its nuclear arsenal, and thus the possibility of a nuclear strike tends to increase in general. Please be advised that according to Ukrainian media reports, Ukraine did use missile systems to hit Russia for the first time today. Overall, we see the case for further escalation ahead, which in turn could intensify market uncertainty, and gold may experience further safe haven inflows. On a technical level, gold's price rose yesterday in today's Asian session, clearly breaking the 2,600 resistance line, now turned to support. Given that the price action in its upwards movement broke the downward trend line guiding the precious metals price since the 31st of October, we switch our bearish outlook in favor of a sideways motion bias initially. Please note that the RSI indicator has corrected higher, aiming for the reading of 50, implying that the bearish market sentiment has eased. For a bullish outlook, we would require gold's price to break the 2,685 resistance line, thus paving the way for the 2,790 resistance level, which is practically the record high level for the precious metals price. Should the bears renew their dominance over gold's direction, we may see the precious metals price falling and clearly breaking the 2,600 support line, forming a lower trough than the one formed on the 14th of the month, aiming for the 2,475 support level. Those were the top financial stories for this hour. From all of us here at IronFX, we wish you a solid trading.